This is the last time I'm doing this, Peter. Not restarting the stream again. All right.
3 times is too much for you? Is that your limit?
You know what this feels like? This feels like trying to get your money out of FTX. Oi, too soon.
Look, if you can't handle this crash, okay, how are you handling this crypto crash, crypto Armageddon that we're in right now? Is it the end, Tom?
No, Peter. No. We all know what the Bible says, all right? Because we've written the words on our heart. The tribulation starts with the trumpets. There's 7 of them, then it moves to the vials, and then moves to the seals, okay?
You're threading the needle with who might be interested in understanding what you're talking about here.
If I'm going to lose them at the 4 horsemen of the apocalypse, they ain't going to like the rest of this video, Peter.
I watched the part of our last stream. You called for 10,000 Bitcoin.
Oh yeah, we're gonna get there. I mean, what are we at? I remember I remember calling where are we at right now? 16, right? So I called I'm not here trying to make calls to people. I was trying to say that Bitcoin's gonna fall. Back when it was like at because my charts were saying around 69,000 that it was gonna fall, right? And I didn't want to believe it. Remember I was calling for 100,000 Bitcoin, $150,000 Bitcoin at the end of December of last year, 2021. Ridiculous. I was that was a hope. It was a hope and a dream, right? Um, it was my charts were saying no. My charts were saying no, it's going to go down. And then when it fell, fell to like what is it, 45,000, 50,000. I was like, okay, my chart's real, and it's saying that Bitcoin's going down to at the time it was saying somewhere between 14,000 and 17,000. And if you'll remember, Peter, I was telling people in the group that we're a part of for crypto that would be the case. And what did they call me, Peter? How did they treat me? What did they say about me that was ridiculous? They're like 17,000. Are you out of your mind? We're never seeing 17,000 again. That's one of my favorite crypto lines. We're never gonna see these prices again. Tom, 17,000. Well, here we are, 16,652 as we speak, right? And those same people who are saying those things to me, they ain't saying it no mo.
All right, hang on. Hang on a second. Okay, first of all, I think your microphone audio is coming through your AirPods and not your microphone.
Oh, that's not good.
They ain't saying that no more. I remember.
Is this any better?
Yes. Yeah, I remember you said it, and people had this like f off look on their face, like, "Get out of here with that! Get out of here with that! I ain't hearing that." And here we are.
The thing is, when Luna fell, right? Luna fell, and that
increase your volume. Sorry, increase your volume.
Increase my volume, sure. Can you hear me now?
Yes, much better.
All right. So when Luna fell, it fell from, what was it? It caused it to fall from like 39,000 to let's call it 25, 26, 27, right? And then people were like, woof, that was pretty rough. That was pretty rough. And my charts are saying, dude, we're 1/3 of the way there, buddy. we got still more downside to go. No. So that was in May of 2022. And then in June of 2022, boom, we get 3AC collapse. The big, I believe it was a hedge fund, crypto hedge fund, big washout. And then we dropped, and it ticked. The lowest it went was like 17,500, right? 17,500 is the lowest it went. And then it stayed there, right? It bounced around. It went up from 17 to all the way climbing. It went up to 25, Peter. People thought we were back in a bull market.
That's right.
They were ready to toss their firstborn child into this mix in order to get that crypto. That sweet crypto goodness. And my charts were saying, nope, not going to happen. My charts were saying that it can actually come up to 25,000 and that it would turn down from there. And it did. And even as it turned down from there, people still said, Peter, but Tom, it's not going to 17 again. Okay? We tagged it. We touched it. We were there for a sweet, sweet minute. It was your time to buy. Place your limit orders. Place your buy orders. Never gonna get there again. There's this lucky you can get it at 17. Well, you can get it at 16 today. I'll tell you what. My charts are saying it can go as low as 6,000. 6,000. Now, I'll tell you, between here, 16,000 and 6,000, I'd be a buyer. But not just yet. All right? Peter, when things go badly or go right, you got to go to the people who are calling it beforehand, not the people calling it afterwards. The same people who are calling previously, it's just going to keep on going up, and it's never going to get any lower, are calling a bottom now. They're calling a bottom now. Peter, if they don't know the conditions that made it come down to this bottom, why believe them that it's going the other way? Right? We're not Peter Schiff here calling for $10,000 goal and $0 for everything else constantly, and when it
my
happens.
namesake, okay? Don't you dare.
Well, it's like that other Tom Hartman, right? Who owns TomHartman.com, bane of my existence. I'm waiting on you every April. I'm waiting to see he laughs on his domain name. Freaking waiting for it. He too, he has opposing views to me, and people like to say things about Tom Hartman. And anyways, I know the feeling. But this idea of you got to look at the people who were right before, who called it for the right reasons, and then look at what they're saying. All right? And so I'm Peter. I'm in the ranks of those people, you know. And
Well,
my charts are saying that it's all about, it's not just me. I learned this from other people as well. It's about global liquidity. It's about how much money is available in the system, how much money is sloshing around. And we are headed for what looks to be possibly one of the worst recessions we've ever had. I know, Peter. We've been hearing that phrase, worst thing we've ever seen since for the last 100 years, for about 2 solid years now, about basically everything. But we got a lot more to go.
Still true.
2022 is going to look quaint next year.
Is there any good news?
Yeah, the good news is at some point, things will get so bad, it'll be as bad as they can get. And from there, now we're talking about a bottom. Now we're talking about where people go. So right now, people are talking about this FTX collapse. They're washed out. They can't get their money. A lot of people lost their money. I get that. Very tragic.
Do we want to say real quick what happened with FTX?
Sure.
Second largest exchange.
Second largest crypto exchange. Turns out the whole thing was a giant scam where they didn't have enough money to cover. They didn't have enough money to cover the user deposits. And the deposits that the users made, they used that money to gamble with. So basically, as bad as anything can get. Imagine the bank where you deposit your money is like, hey, by the way, we don't have your money. What happened to it? Did it get lost through some accident, through no fault of your own? No, we freaking bet it all, and Sally's got a runner, horse number 7 on the track, and it didn't win. What? Wait, excuse me, what? Back up a bit. You did? What's my money? We bet it. All. We bet all of it. Okay. So it turns out it's $8 billion of user funds that they lost. Right? Now imagine $8 billion sounds like a lot of zeros on $8 billion. But when you consider the idea that these things are leveraged out, right, in the crypto space, that a bunch of other crypto platforms and hedge funds and protocols and all that were basing their funds on things that were in FTX, where they could use something as a loan, they could use something as they could get a loan, they could use something as collateral, and they're able to leverage it out, right? You have this sort of like subprime mortgage 2008 sort of crisis where we don't know all the other people who are insolvent because of the $8 billion that are lost. There could be hundreds of billions of dollars that's already gone, and that's even more that's waiting to disappear, right? We're finding out every day that there's people who admit, yeah, it turns out we had all our user funds stored in FTX for our protocol, our system, because we thought they were one of the safest platforms. So now all their money is gone, right? That's crazy. That's like your pension fund that you're dependent on, who bets the money on a scam. They put their money in a system that's a scam. Oh, by the way, Peter, did I tell you the Ontario Teachers Pension Fund had their money in FTX? That's right.
Is that why they're
millions upon millions of dollars of people's hard-earned money that are
why they're
counted on for
striking?
pension? Oh, I don't know. Peter, this is too much bad news to follow. There's just too much. I can't follow all the bad news. Right? It's enough for me to get up in the morning. I laugh, but it hurts inside.
All right. So, second largest exchange that created a type of ripple in the crypto world.
It's happening now. The ripple is happening right now as we speak. We don't know how bad it's going to get. And it's going to get worse. Much worse.
Crypto.com.
I mean, any of these centralized locations, right? Any of these places where it's just like a bank, but better, and just like a this thing, but better. I mean, essentially, these places you have to assume, until proven otherwise, that they're not solvent or they don't have access to your money and all that. So,
Allegedly.
exactly. So, allegedly, you want to allegedly log onto a platform and allegedly remove all your money. Make sure that you can allegedly do it. And then when you have all your money on hand, you go, okay, at least I have all my money. And then after that, figure out how much you want to put back on there little by little in order to do what you need to do. No reason why your funds should be locked on these platforms, because we don't know. Even if the platform that you're on you trust, you don't know if they trusted somebody else that is not working. And this is how these things work, right? This is how the house of cards falls. We don't know who's actually solvent, who actually has liquidity. And so it causes the bank run. You got to take your funds out, hold it, and see what happens after that. You don't want to be the guy sitting there. Peter, there are people, I don't know if you remember this for FTX. I was saying, remember I would wake up and I go, I don't know if FTX is going under today. I better take off whatever I have there, right? I'd be paranoid. I'd be watching it every moment. It's like, I'm not sure what's going on. I mean, Celsius fell. 3AC fell. Who's to say the FTX won't fall? I don't know. I'm not reading their books. I don't know. I don't know how they're making their money. I don't know how they're generating their yield. I have no freaking idea. I have to assume that it's that there might be a big problem. And
Well, if you
it was.
listen to SBF and Beckman Freeman on that podcast, I don't know if you saw what I shared. He basically out and out admits it's a Ponzi scheme.
What, the magic box that
Yeah.
that generates money?
Yeah.
I thought he was saying that in the podcast as like anti Ponzi scheme
He was
sort of idea.
describing
I didn't know he was describing his own thing
and what everybody else is doing, or at least
and what everyone else is
he
doing. Yeah.
insinuated. I
Peter,
never
I'll be
trusted
fair.
any of the centralized anything. I mean, I don't even understand that. That's not really crypto to me. Like, sure, use it, but you're gonna keep $500,000 there. It's
Your
insane.
life savings.
While you're watching other things fall down. Like, I get it. You kept a little bit of money there to do some trading. It's active. Okay, what choice do you have? But you're gonna store your money. I hear about these YouTubers who had tons of cash in there.
All of it.
Why would you? Are you trading $500,000? I mean, what is the point of this?
Well, because if you can generate 5% yield, 7% yield, 10% yield, of course you don't want to sit around not getting that money.
Well, it's all new. It's all new, right? This is relatively new. Oh, it's been 11 years. No, okay,
Peter,
it's new.
You remember we had the receipts, video after video. I was saying, yeah, it could be totally a Ponzi scheme, right? I am not saying it's not a Ponzi scheme. What I'm saying is, don't be the last guy to turn off the lights. Haven't I been saying this? Ain't I been saying this? All right. That we don't know. It could be a Ponzi scheme. We don't know where the fundamentals are, and so what you're buying is risk. When you're buying the crypto, you're buying a lottery ticket that never expires. Turns out it expires when the thing that you bought it from collapses, but it never expires. Like, other than that,
Well, if you keep
had the
if the
lottery
crypto, if you have the
you
keys,
had the ticket.
then you have it.
Exactly.
Then it doesn't expire, or at least for a while.
Yeah.
All right.
But suffice to say, this could be another drop, right? The thing is, we're seeing right now in the regular stock market, the TradFi, we're seeing Nasdaq's, gold, S&P start to fly up, right? We're seeing them rise, and people are like, okay, bull market's back. Fed is gonna more money's gonna come into the system. We all know a recession is coming. That's already priced in. And the question is, why hasn't Bitcoin risen too? Right? Bitcoin and crypto space in general is a great indicator of what's going on in global liquidity, right? If the S&P is going up, but Bitcoin doesn't go up, then I believe S&P is going to come down, because regular stocks are manipulated by more than just how much money is sloshing around. It's manipulated by options and derivatives and what money managers have to do and hedge funds need to do in order to make their money for that year, right? So can you imagine if somebody all year long the S&P has been flat to down, right? You've been losing money on your positions, and you're paid based on how much money you make people, right? That's where your bonus comes at the end of the year. You might get fired if you don't give a proper return. Whatever, these people are starving for return. So then we get a little bit of the good news, a little bit of a blip where inflation looked like it was coming down a bit, and some details come out, and then all of a sudden, brrr, everyone rushes in order to drive up the price. And as the price gets driven up, people have to rush in to buy more, and it goes higher and higher and higher and higher, right? Well, that's only sustainable to a certain point. And if you're not seeing that reflected in other assets that are similar to that asset that don't have those dynamics, well, then you know that the rally isn't necessarily a real rally, right? Sure, it could be wrong. It could be that Bitcoin all of a sudden will explode up, but I think it's far more likely that the regular markets are taking their last bump up, their head above the water, before it's about to head down drastically. If you take a look at what happened in 2008, the charts in 2008, you take a look what happened in 2001, we're following very much in the same vein. I mean, it feels so very .com crisis, where we're having this last rally up and we could have this huge drop down the other side. All right. And so I would not be jumping in. All the conditions that created the fall over the last year and all these things still exist and are worse. Right? Did someone tell you Russia-Ukraine thing is going better? Right? Is energy crisis in Europe getting any better? Are the prices at your grocery stores any better? For crying out loud, they're the biggest names in tech and in businesses are firing people by the thousands left and right before Christmas, Peter. Before the holiday season, when you normally ramp up in order to be able to deal with it, you have massive layoffs, right, from all these big retailers, and so you're going to have that also for the small mom and pop shops. I think we're going to see discounts on Christmas items and on Black Friday sales and all that sort of thing that will be unbelievable. I wouldn't be surprised if we see 90% off stuff, Peter. I wouldn't be surprised at all. So we're at the beginning of the recessionary impulse downwards. We're just at the beginning. I mean, even if it started, no matter where you think it started, I think the recession started in January, but the global recession is really starting to pick up. We're at the beginning of we're at the tick, 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 tick in the roller coaster about to go over. And now people go, I think now's a good time to, the tick, tick, tick stopped. So I think now's the time to buy. No, that's right before the freaking fall. All right. And so you don't want to be a hero. There's no reason to pick a bottom, right? We'll know that the conditions are there from a bottom when people have truly capitulated. Peter, people think people have capitulated now. When people are going around asking, is this a bottom? They have not capitulated yet, right? When you and your neighbors say, forget this, I am never investing a penny again in XYZ asset, that's when you know it's the time to buy. That's when you know it's the bottom.
That's hard. I think a lot of people might be there right now. Certainly, if you had your money in FTX. You mentioned capitulation.
You
One
got
of
it.
the indicators. You know what?
Sound it out.
You know what?
Capitulation.
You said one of the indicators would be mass layoffs.
Yeah.
So isn't that what we're seeing now? Facebook, Twitter.
Yeah, Facebook, Amazon, all that, but it's starting at the top, right? So, like for example, Amazon had hired way too many people during the by their own metrics in the pandemic, and so they had ramped up a lot. So now they have to sell off. When we start seeing people lose jobs at places that didn't ramp up, right? That's where it's really gonna start biting, right? You're gonna see unemployment rate. I think the unemployment rate is still at I don't know what I checked it last. It's still at 3.5, 4 or whatever. Like we're gonna need to see that at 6 and above. Like people are gonna start losing their jobs. And when the unemployment rate, let's say it gets to 6, like doubled what it is right now, it's not really 6 because the unemployment rate in the United States doesn't count the people who stopped looking for work. It doesn't count people who had to take on a second job because they couldn't make ends meet. It doesn't count any of that stuff. And so there's tons of people who would actually be in the unemployment rate if it was calculated to count all the people who aren't working. It might be 15, 20, 25%, right? And then you're in Great Depression territory, how it's actually calculated. So don't be fooled by the unemployment numbers. But once you start hearing that talk of unemployment rate is now much higher, and that the Fed has to come in and lower interest rates, and the government, people are clamoring for the government to do something in order to ease pain and burning, then you know now's the time. Now's the time to invest.
Kathy Wood, she said she had a tweet thread. I think the gist of it was that what the Fed is doing is exactly the wrong thing. That it's a deflationary problem, and that what they're doing is similar to what was done during the Great Depression or before the Great Depression, 1929, which caused the Great Depression.
That's right.
Whereas what should be done is what was done in, I think, 1920, which provided a growth that was
1940s as well.
So she thinks that raising interest rates is exactly the wrong thing to do. What do you think about that?
Well, the question is, we live in a global economy, or if you consider the economy in your own country, the system is dynamic, right? It's versatile. It adapts to changing circumstances, different products within the market, different supply and demand needs. Well, as soon as a centralized entity comes in and declares this is what it is for everybody, well, they don't know if the system can handle that sort of input. They don't know if that policy is the perfect policy. And even if it was the perfect policy, the way it's implemented, it's one for all, right? What if it's different for one sector of the economy than another sector of the economy? So almost by definition, as soon as you have any sort of institutional intervention within a system, you're going to get these ripples as the system says, hey, wait a second, now I have to adapt to this new piece of information. It creates volatility. It creates inflexibility. And so
Instability, right?
instability, exactly. And so the Federal Reserve raising or lowering rates makes it so that everyone, if you're a business owner, you have to sit there waiting. I don't know what they're going to do next month. How are you supposed to make decisions for your future? How are you supposed to hire someone or fire someone? You don't know what's gonna occur. Why would you put your own money at risk in order to start a new business or hire a new person or drive productivity or innovate in a thing? Why would you do that if you're not sure what the next month holds, much less the next 3 years, right? If your ability to access money, access capital is not clear. So everyone's waiting for the profits on high to let us know what interest rates they're going to be setting, or for the government to see what kind of fiscal stimulus it could provide. And so you're just sitting around and you got to wait. Why would you ever risk it? Right? And they can have all these altruistic ideas as to why they should do it. But by definition, they cannot properly manage a dynamic system. That's just how a dynamic system works, right? It's like saying, I'm going to make a modification in your body, and I know for sure there's not going to be any side effects. Really? There's no way you can guarantee that.
You
And
sound like a
so
free market guy.
well, I'm not really a free market person. It's just more that I don't mind centralization, but let the decisions for the centralization be one of the components within the dynamic system, right? So let's say the government or the Federal Reserve or central banks or whatever want to guide a certain type of behavior. They want to incentivize a certain type of behavior. Well, let it be done in such a way that you can either take part in that thing, the incentivized behavior, or not. Not that you must either take part or not take part, right? So for example, right now the Federal Reserve provides an interest rate to for interest on overnight on excess reserves. What that means is that if you're a financial institution and you have the right credentials and you have money to spare, you can or assets, I can't remember what it is, you can deposit it at the Fed. You can deposit it at the Fed and they'll give you interest on that, right? Let's say they give you 0.5% interest on that, just for the sake of conversation. It's not that high, but whatever, let's say it is. Well, they don't force financial institutions in order to take that amount, right?
Mm-hmm.
They provide that as opportunity. So when we see in the markets that people are willing to they're willing to lend money to somebody else for less, they'll take a less interest rate than what the Federal Reserve will give, then we know it gives them market information. It tells us, oh, wait a second, why would these institutions prefer to Why would they issue a guaranteed interest rate from the Federal Reserve and get something that's less from somebody else? Well, it must mean they have a problem. There's a problem in the system. The pricing mechanism gives you indication as to what's going on. It lets you know what you should pay attention to and not pay attention to. But when a centralized organization says this is how it is and there's no choice, well, then you lose that pricing information. You lose the aggregate information from a group of people, and then you're flying blind. And so you tend to not make decisions, or you make decisions to be more cautious. And so we don't want a centralized entity. I'm not a free market person. I'm fine with institutions making modifications, suggesting changes, but you want them to be a participant within the market and not the judge and jury. Does that make sense?
That does make sense. So, do you think the problem is deflationary and that they're doing the wrong thing?
Well, yeah. Well, the problem is always going to be deflationary. Like, the Fed had it right that inflation was transitory. The problem, as stated by many people, Mike Green, Jeff Snyder, and all that sort of thing, they explained it very well. You can find it online. That when the Fed said transitory, everybody thought 2 weeks, 2 months. And transitory in an economic sense could be 2 years. And so they kept waiting, as they should. And then eventually the public clamor was so high, they're like, you caused inflation. They didn't cause inflation, okay? The world was shut down. The supply chains were all fakakta. War started in Europe. All right? It was hard to get stuff. And I'm sorry, if you want to get a pair of AirPod Maxes and there aren't enough AirPod Maxes, you're going to have to pay more money on the side market in order to get it. This is not inflation. Prices go up also when it's not enough of something. So we had this whole economy all over the world completely rejigger in a way we've never seen before. And so, of course, prices go up to reflect it.
But
Right?
don't we have a glut of inventory?
Well, now we have a glut of inventory. So that's why we're headed towards a deflationary event. But that inflation that everyone keeps talking about is only inflation if you consider inflation the term to mean prices going up. But prices go up when there's too much money or not enough goods. Both of them can make prices go up. And so the Federal Reserve started hiking interest rates because they were thinking, we don't want people, for them, they're an expectations-based organization. They don't actually do anything. They just make people think they're doing something. And so they couldn't have people think that inflation was actually there. If their concern is if people think inflation is really there, whether it really is or not, if they really think it is, then people will start pricing their things accordingly, right? Business owners will price their products and services at a higher price, thinking that it's an inflationary environment, and that itself can cause a chain reaction of prices going up. And as prices go up, people demand more money for their job. As the employers pay more money, people can raise more prices, and the prices keep going higher and higher and higher. They don't want to be in this cycle. So they actually caused the problem, or one of the reasons to cause the problem, because instead of educating the people to explain that transitory could be 2 years long, they didn't, and then they caved. They caved right when they shouldn't have.
So
That's fine. It's fine.
what do you have confidence in terms of crypto, where to put your money?
Well, here's the thing. So you've been looking for you look for the signs, you look for your assumptions, right? So for the last year or so, my assumption has been I've been in the deflationary camp, that inflation will only exist under certain circumstances for a certain period of time. And that's what we've been seeing. We've been seeing that it's not everything that's been going up in price, right? You know you're in an inflationary environment when all things go up in price, not when certain things go up in price. So we know we're not really in an inflationary environment. That means the market, if it's whatever market is pricing in inflation, it means that it's going to have to reverse course. If inflation comes down, it's going to have to reverse course. And heck, sure as nothing, one of the things that stops inflation is a recession, Peter. A recession stops inflation because people stop spending, stop buying, stop moving, and then prices have to come down in order to solicit them to come out, right? Can't keep increasing prices if people are not buying.
So it could be that the sales that will happen during the holiday season, couldn't that snap everybody out of this state and get them to spend again, and then
Well, it won't get them to spend again because it'll be an indication the prices will come down because there'll be too much inventory, too much supply, right? There'll be too many things. And so if that happens, it's not that good snap, a snap, because even if people spend more in order to buy it, the people that they're buying it from are not making any more money. They're losing money on the stuff. That's why they're selling it at such a low price. What that'll trigger is that people will, I think, people will realize, holy crap, we're at the beginning of an inventory cycle, the downtrend of an inventory cycle. That means we have a recession, a global recession on the works. And all of a sudden, you're in recession mode, right? That's the winter is coming thing. Well, you're not going to be spending as much as you did before. You say, oh my goodness. If I'm buying this thing at 90% discount, and I'm buying 5 things at a 90% discount, that means my job's not secure. People will make that tie. Be like, my job's not secure. Wait a second. Right? When people started getting laid off, it's like, why am I getting laid off? I'm sorry, Jim, we don't need you for the next 3 years. We just bought 4 years worth of stuff. We'll see ya. People are going to be like, hey, wait a second. And all of a sudden, people will understand this deflationary bent. But you ask, so then what do you do? What do you buy? What do you do? Well, if you're going to, from small things, like this is why it's so useful to understand how these markets work. Like, I wouldn't buy Christmas presents now. I buy Christmas presents on the 22nd, right? On Boxing Day. You want to see deals? Man, then you'll see
Boxing Day
deals.
is not the 22nd.
I know. I would buy it the 22nd. I would even buy it after Christmas.
Oh, I see.
Right? I would even, people would be, I mean, they're going to be giving stuff away after that. Like, if that's the case, right? If it's true that it ends up that the prices end up falling, just like I'm talking about here. I'm not coming up with this. I'm just reporting what other people have said. If that happens, then you know that the assumption, one of the assumptions along the way that we're headed towards a depression or a global recession is true. You'll be like, these people who called for the depression, they're saying that this is one of the things we should see. We should see prices come down for a lot of things drastically. We should see inflation come down drastically. We should see unemployment rate go up drastically. We should see talk in the markets. We should see bond yields fall drastically. So, like, if you're ever going to buy U.S. government bonds, freaking now's the time. You know, between now and the next 6 months, you want to buy government bonds. Not financial advice, just saying.
Not financial advice.
If this stuff is true, then going into your brokerage account and buying TLT, not a bad idea, right? If your government has government bonds and now they're there at 3% or whatever. I mean, you haven't had 3% since I was a freaking kid or younger, even before that. You haven't had 3%, and so you might be like, okay, all right, let me lock in some 3% gains. That might be pretty nice to have 3% during the interest rate during a global recession, right? That might not be so bad. You start saving more. You start cutting on your costs, right? If you get ahead of the curve in the recession, you don't wait till the first snowfall comes. You start cutting back beforehand when it comes to winter. You start gathering ye rosebuds while ye may. Right? You start being the grasshopper who prepares the reserves. No, the ant who prepares the reserves. I always forget which one of the bugs is the one who prepares for winter. In any case, you might consider gold, right? You might consider gold. You might consider buying crypto.
Peter Schiff
right?
rears his pretty head.
Broken
Look
clocks
who's coming along
twice a day. Okay. And yeah, you might want to buy some crypto. I want to buy crypto just yet.
Which crypto?
Which crypto, Peter? I'm a Cardano man. All right. If there's one thing I liked with this whole collapse and all this problem is that nobody is talking about Cardano, which is great. I was worried that, like, you know, who knows? Maybe it can happen. But I was worried that snakes would come out of the grass and all of a sudden it would turn out that Cardano was also part of this FTX, Luna, 3AC collapse, whatever. But still, people are like, forget Cardano, which is, I can't even tell you how relieved I am, Peter. I love that. You want to buy the thing that no one's really paying attention to, right? Because then when it explodes, then people pay attention to it, and you're up 1,000%. Great, right? When Solana was outperforming Cardano, Peter, and people all had their snide remarks about, look how much better Solana is doing Cardano. Really? Well, it turned out Solana was like backed by a bunch of these investors who were also a part of FTX, including FTX, and they started selling that stuff tout de suite. Dretle, when it was time, man. They started selling the stuff right away, and Solana just tanked. All right, thank you very much. Oh, the only reason Cardano didn't tank is because institutional money is not interested. Good, buddy. You think I care that institutional money is coming in? Get out of here. What, I got to care about institutional money because if they have a bad day, my thing drops 20%? Beat it. Cardano's working just fine, just the way it did before. And if it stays around this price for the next 10 years, I'd be perfectly fine. I just happen to think that as the tide goes out, people are going to start turning to the cryptocurrencies. Remember we talked about after the crash, we'll then be able to see what cryptocurrencies actually survive very well, actually perform very well. And the very fact that Cardano has barely budged so far, I mean, compared to the other cryptos, perfect. Talk about something that could skyrocket afterward. Ethereum, if you remember, went down to like $90 at some point before it skyrocketed to 1,700 or whatever, 2,000 that it went afterwards. It's had to survive its crash, survive the crypto winter, and then it rose. I will mention one thing though. We're not at a bottom yet because we're not in the recession yet. People are saying we understand the recession is coming, but no one's priced that in. I know some people say that it's been priced in. It hasn't been priced in yet, right? If you yourself are sitting there going, I'm not sure if I'm going to be able to keep my job, or I'm not sure if my friend's going to be able to keep their job, or whatever colleague that I have. If you're sitting there worried about that, right? Because you saw a lot of people lose their positions or whatever, you're worried that you're next, then you know you're near a bottom. Until then, you're not. You're not. If you're still talking with your friends about should we go on a cruise and what kind of vacation we have next year and all that sort of thing, no. Once you see MSNBC flash across the screen, global recession, 1 hour talk about what the Federal Reserve interest rate means to you, then we're near the bottom. That's true capitulation.
How long do you think the recession, global recession, depression, etc., will last?
Who knows?
The predictive
Growth
power
can
of
start.
charts.
Well, some of these things last 10 years. Some of them last 6 months. This,
10
what we're
years?
seeing right
10
here,
years?
does not seem...
10 years
Well,
is what you're telling me? Are you telling me 10 years, Tom?
well,
Is that what you're saying?
consider it this way. I think after the Great Depression, it was 20 years before things came back. After the dot-com crisis, it was 10 years before things came back. After the global financial crisis, it was 8 years before things came back. The Chinese crisis in 2011, 2012, 2 years before things came back. Volmageddon, it was 6 months before things came back in 2018. And then coronavirus, one of the biggest things that's ever happened on the planet, it was like 3 months before things came back. So 2 weeks before prices rebound. We're living in a period of volatility, and that means volatility both ways, right? Volatility is uncertainty. The range of potential prices widens, right? It can go up or it can go down, and it can do both and go back and forth. And since we had this volatility shock of the pandemic, and then we had the volatility shock of the response, and then we had the volatility shock of the war in Europe, and then we had the volatility shock of all the things that are happening around the world, where it's just this. Think of it as this sort of like earthquake, and the aftershocks can occur. We don't know how long it'll last, but it could be that things seem great one day and bad the other, and great one day and bad the other, as opposed to steadily bad for a period of 10 years, like we saw after the dot-com crisis. We don't know. Things can explode. So I wish I had a better answer for that, but what you want to do is bet that things will be uncertain. So don't make certain bets. Hey, that's pretty good. You should put that on a t-shirt.
Stuff it in a fortune cookie. All right. Well, look. At some point, we were hoping that Bitcoin would get to 300,000, 500,000. And here we are at
16,675.
And it could go down to 10,000, 6,000 even. Not great. Not great.
I look forward to 6,000. If it hits 6,000 for the Peter, if it hits 6,000 for a day or for a little period of time, which is what my charts seem to suggest, that means that I have a signal that can predict the future. It's a money printing machine. I'm so looking forward to it to be accurate, right? It called the drop. Now I want to see if it can call the bottom. If it does, I'll make money. I'll make so much money. So that's why that's why I'm happy about it. I'm not in the markets right now. I'm just so excited that my signal seems to be freaking dead on, just so right. And It came to me from a dream, so I don't even know how the signal works. All I know is that it does, which is why I haven't bet anything on it, because I have no idea really why it works. So we'll see what happens after that.
If you want to talk to Tom about a signal and find out about his dreams, you can come see us. We're doing
Why do you
an
have to say it like
event.
that?
Predictive. Look, I'm watching Graham Hancock's Ancient Civilization on Netflix. There's only so much, you know,
It's the
fringe
Nassim
behavior.
Harameyn's, vortex-based
I'm
mathematics
not
and
even there yet. I'm
infinite
not even
energy.
there
Yeah,
yet.
Peter, you're on the edges. You're on the edges now, Peter.
Well, it was good to get an update. We're going to be doing an event talking about crypto and different things. You can find out about Tom's dreams and all that stuff. He has this pretty cool signal, and he's been showing it to me, and it appears to be right. And if you watch our previous videos for the last a little while, you'll see not all the videos because your signal is relatively new, but the last few you were really calling these things. And I remember, what was it, 7 months ago or something, um, telling people, look, I think this is going to go down to 18,000, in between 20 and 10,000. And the looks were like incredulous, like you're crazy. We would do, anyway, seeing the face of people.
It's
And
also
now,
on Twitter. You can go on my Twitter at Sacred Prophet, and I like to share some of these charts over there.
and when we put up our event, that's where it'll be. So you can check it out there, as well as Happy for a Change. Well, Tom, it was good. We got to hear about crypto, Cardano, capitulation, Kathy Wood, SBF. Oh, Tom, where is he now?
Should
I hope
we start recording now?
it
was a
I
good
think
practice. We'll
it was
just.
a good practice. I hope he makes it. I hope he. Did you see what he posted in his tweet?
Did you see the New York Times and the fluff piece on him?
No, no,
Oh, you mean the tweet where he says, "Oh, I'm going to start a new venture"?
no. Where he wrote, he referred to the Binance guy, his rival, and he was like, um, "Well played, you won." And it's like,
Wow,
dude, it's not a game.
wow,
What are you talking about? You won. You messed up. This is not some game where you're like, oh, I'll get you back next time.
right.
You ruined tons of people's lives.
I saw an estimate 200 suicides so far.
Look, this is what I want to leave folks with. Okay, whenever bad things happen, whenever there's disaster, problems, mistakes, you want to learn from it, and caring about what you're investing in something that you've vetted. That's extremely important. I know there's all these coins out there and you can get rich quick and this will go up fast and all that stuff. And one of the reasons we like Cardano is because, as far as we can tell, it's diligent. People consider it to be boring, doesn't move as fast. To us, those are selling points. Um, I remember when we had a conversation in our crypto group, I told them, look, all but one, maybe three coins are going to be destroyed. I remember the way they looked at me like, okay, all right. But that's what I believe. I believe almost everything is junk. When you have people coming in and you're going to get this and get that, you got to be highly skeptical of those things, right? And if you're the people who are losing their life savings, putting more than they can lose, like this is why we say this stuff. It's because we didn't have to wait till crypto to learn this. You can learn this during 2008, the financial crisis. Things seem too good to be true. They probably are. And you want to learn from this. If it's not in your possession, if you don't have your keys, you don't have your coins. All right. Um, yes, you're going to be using these exchanges, but don't keep everything on the exchange. Keep as little as you can. Don't put in more than you can lose. I mean, sure, you're going to put in enough that it's going to hurt if you lose it because you want the potential of it being better than you, or as good as you hope, or better than you expected. But keep it to some reasonable thing. Don't get to a point where your whole life is ruined because you did this. Follow common sense rules like this, and you can watch this like we are. And the last thing you hear is figure out who you can trust, figure out who's reliable, not the shiny objects out there, but find out who's reliable. And the way you do that is not by what they, it's not by the way they present themselves, but what did they say and what happened? Did they say and what happened? Over and over. And the people who do that more often than not are the people you should listen to. And don't listen to their accounting of if they got it right. You watch it because they'll only tell you when they got it right. They might not tell you when they got it wrong. But you want to pay attention to that. And when you do, you'll be ahead of the game. We knew this was coming for a while. I've been sitting down watching, waiting for the numbers to turn red and to go down and down and down and more and more and more. And while every single week that went by, I kept hearing about this is the bottom. This is the bottom. Tom would just tell me. Just look. It's very obvious. These are the things that happen when you reach the bottom. We're not there yet. I'm not saying you have to listen to Tom, but you should definitely listen to Tom. All right, folks. Just wanted to give my 2 cents. Anything else?
No, that'll be it for us. And I know we don't post often, but when we do, it's only about things we care about.
And
Let's
we are
forget.
creating a community of people who will be privy to this on a daily basis. So connect with Sacred Prophet on Twitter. You can join me. I am Bad Guru over on Twitter. Sacred Prophet is really the guy you want to follow if you're interested in this topic. And we have a project coming out that a nice little club that we're going to be creating here. I think you're going to be excited about it. All right. Take care, everyone, and good luck.